Hey everyone, we're with Jason Jean from Academy Mortgage. He runs a team of mortgage originators here locally in Western Mass. Jay, thanks for taking the time, man. I appreciate it.
Good to be here. Thanks for having me.
So you're working from home, right?
Yes, apologies up front if my children run in and take my computer.
I've had children in almost every video thus far, either on my
Perfect.
side or the guest, so don't worry about it. We're recording this on March 26th. Everybody's staying home with the coronavirus. So mortgage rates, mortgage applications, what you're seeing. You guys are full-fledged. You guys are still working, right?
Oh yeah. We work, primarily in the residential sector. So we're doing, 1 to 4 unit, purchases and refinances right now. So we're very, we're a national company who's really just focused on that, and that's really our only focus. So we're, business as usual, obviously moving people remotely, doing the same things as, any other business is doing right now, but we're definitely open, and our plan is to remain open because this is all we do every day.
So we just, this morning, we just had a historic jobless claims number, over 3.3 billion. In the United States. If people are sitting on a ton of equity in their house, should they refinance to cash up in case of a job loss situation or something like that?
Yeah, refinances are at the top of everyone's mind right now. That if you own a home, you've heard Fed drops rates to near zero, et cetera. Those things are all affecting what's happening with mortgage rates, but really, it's kind of the stock and the bond markets. So it's kind of a long conversation, which we don't really want to bore you to death with the details with, but the long and short of it is, a few weeks ago, mortgage rates really dropped to all-time low levels. So we were taking calls every 10, 15 minutes, taking new applications, getting them locked and into process. So it was a really, really good time, then to refinance. If you didn't capitalize on that opportunity, what started to happen, not only did kind of, investors start taking their money out of bonds, which are mortgage-backed securities, which increased the interest rates, you also saw a lack of liquidity in our market. And this is kind of, similar to what happened back in 2007, 2008 during the mortgage crisis, but in a different way. Like we were too busy as an industry. So imagine if you take $1 billion of loans and you refinance them into $1 billion of new money, you need $2 billion. Well, we didn't really have twice as much money as we really needed. So, so that being said, what that caused is kind of like a supply and demand issue. So that's where you saw interest rates start to peak. Okay. And in recent events, we started to see the government step in, which has been helpful to increase the liquidity that we have to be able to kind of offer people money, especially with the purchase mortgages, because, hey, a lot of people are in a 30-year fixed. If you can get it go from 4 to 3, great. But you're probably okay at 4. You're not, but if you're like in the middle of buying a home and there's no money left, well, that's kind of a big deal. And that's going to really hurt the economy more than someone just not being able to capitalize on a lower interest rate. So we want to make sure that as an industry that we have enough money for the purchase side of things. And so the government stepped in, they started doing that. The problem right now at this moment is that they're not really purchasing the Ginnie Mae backed securities, which are really your government loans, FHA, VA, USDA. Hopefully we'll see some kind of intervention there because the rates have really spiked on those at the present moment. Kind of point of the story is it is changing so rapidly. I mean, you'll see rates go from 3.5 to 5.5 in a matter of minutes. So this is, again, similar to what we saw in 2007, 2008, but similar reaction to a different situation. So it's been an absolutely wild. In terms of refinances, what we're doing is we're looking at where people are at, where they really kind of need or want to get to, compiling a list and just saying, hey, if the rates drop at that moment, we're picking up the phone going, hey, you want to act now? Because it'll probably be gone in 3 hours. And that's the reality of it. It is absolutely wild.
So when during the process, they contact you, right?
Yep.
And at what point do I have to have a mortgage application in order to lock my rate? How do you lock the rate? How does that
Yeah.
process?
Yeah. So, there's, some people are just like, hey, I'll just call me when it's ready, but then we still have to get your information. And that's a process. Now we have like an online application. Not everybody does. It takes somebody 10 to 15 minutes to complete. We could do it over the phone too. But obviously there's a limited amount of time that everybody has. So it's definitely helpful to have the application in our system. We're probably not going to pull your credit unless it's like something that we're going to be able to move on right away, but at least we'll have it. So all we have to do is pull your credit, run it through to make sure we get the approval, and then hit lock. And then we can get the rest of the process started. Of course, there's no charge at most places to do that. But if you wait until I'm like, okay, rates are at your target, and then all of a sudden they take 2 hours to call me back, sorry, we don't have time to get your information because the rates just switched again and they're going back up.
So if you lock now, can you like redo it if they drop again? Like, can you just continuously lock your rate?
I'm sorry, I couldn't hear you, Aaron.
If you were to lock in a rate now, and the rates drop, can you lock it in again, like at the 11th hour?
Most banks have what's called like a renegotiation policy. I don't want to say most, but some banks have a renegotiation policy. Traditional wisdom is kind of thrown out the window. There's like barely any money left. So we're, our conversations with our clients are like, look at like, if you like it, lock it. Don't look back. In a normal situation or normal circumstances, we'd be like, okay, rates did go down throughout the process. Chances are they're probably going to go down throughout the process. Our typical refinance process would take 3 to 4 weeks. Other banks could be 90 right now. It's going to probably go back down within the next 90 days. So you're not just going to get your cake and eat it too, where you can just lock it and then take lower rate until like lower rate and get it. Because otherwise you just be locking all the time. But the bank, this isn't how the banks operate. They take their money, they put it aside for you, and they're paying money on it. So every company would just be losing money hand over fist if they just could offer you lower rates if the market turned. And especially right now, the banks, all the banks would be closing if that was standard procedure right now.
Right. So can you explain to me the process or the decision between if I have equity in my house, to either refinance down to a 15-year, a 20-year, or go back to another 30-year, lower rate, maybe a cash out situation, versus a home equity line of credit or a home equity loan. Costs and everything associated with that decision.
That's a good question. I love home equity lines of credit for people that are responsible and for people that have maybe seasonal businesses that make a lot of money and then they have to carry it through like a long winter or COVID-19 outbreak, whatever it may be. Lines of credit are great. What I don't like is an average homeowner taking out an equity line to buy snowmobiles and quads or whatever they like to play with. And then all of a sudden they call me a year later, they've been paying interest-only payments and they still owe the same amount that they did. And it really costs them a lot in the long term. So cash out refinances can be a good way to kind of just make sure that people don't get into trouble with the equity lines. As of right now, between a 15 and a 30, I've always said this because I did go through 2007 and 2008, which were wild times. And I did refinance people that were in really good shape from a 30 into a 15. And then all of a sudden 2008 happened and, both of them were out of work and they couldn't make their payments and they couldn't get them back into a 30-year term. So I always have that conversation when I get the call to say, hey, I want to go from a 30 to a 15. I look at their situation. If it's if they're really solid, okay, let's do it. But if they're like just really trying to force themselves into a savings, but if one of them lost their job, they'd be in a lot of pain. I'm going to have that conversation with them to say, look at if, we don't know what's going to happen, right? Case in point, look at where we are right now. Like, who could have predicted this, right? We never would have. But the thing is that for the last, since I've gone through 2008, I knew something was going to happen. We weren't going to be just riding this upward trajectory of amazingness forever. Like, it doesn't happen that way. So you have to prepare yourselves for the worst. Hope for the best, but prepare for the worst. And oftentimes that's going into a 30, taking an interest rate that's about 0.5% higher, and then you can make extra payments that are, penalty free to try and pay it down faster when you're doing really well. Or you can take that extra money, better yet, and reinvest it with you, Aaron, and then make more than
Now we're talking.
make more than your money that you would have paid down on your mortgage, because the mortgage is, relatively low. If we're at 3.5%, can Aaron make more than 3.5% on your money over time? I know right now he's probably going to be saying no, but he will be saying yes over time, right? Because he always does that, and he's not paying me to say that, I guarantee.
So yeah, so if I'm sitting on equity, the refinance is an option. Going down to lower the rate is an option. But the home equity line of credit, I like too, because there's lower closing costs. You're not paying interest on money that's not out. You can kind of move it back and forth again if you're financially responsible. So all our friends are all financially responsible, and all my clients are too. So anybody getting this can do the HELOC, I'm sure.
Yeah, if you don't have a HELOC, get it quickly. Like it is, and we have contacts. I don't personally do home equity lines of credit with some local guys that do that for our clients. It's a no-brainer. I think typically it's free if you don't close it in the first 3 years, and then for closing costs, and then I think it's like a $50 annual fee, and you can get up to potentially 100% of the value of the home as of today. Who knows what's going to happen tomorrow? But yeah, it's a no-brainer. Safety net is a great thing to have for sure.
Like
responsible.
Right. Just like having extra cash lying around, especially in times of uncertainty. For sure.
Yep.
All right. Now, new buyers, right? New purchases.
Yep.
Is there any activity going on right now? Nobody can work. Everybody's staying home. Is there still activity going on?
Yeah, that is a question that I thought I would have a different answer for today. If you asked me that, a couple of weeks ago, but I am surprised at how busy it still is on the purchase side of things. Like we are still taking a lot of people in that on getting them pre-approved on new purchases. So I thought that, the unemployment rates and everything would affect that a little bit more. But I think a lot of the unemployment numbers come from people that maybe aren't going to be ready to buy a house yet anyways. So we are still, like, a lot of people who, have good incomes, good jobs, are able to go mobile, and it's business, as usual, I guess. But, a lot of business are still able to operate. A lot of services are still needed. And so we are still very busy on the purchase side of things. Do I expect that to maybe slow down over time, depending on how long this lasts? Yeah, I probably will. I don't see it, hopefully, as being, as crippled as it was, years ago, but only time will tell.
And real estate agents are still out showing houses more on like a virtual side of things, probably, right?
Yeah, I think you're going to see more of that happening on the virtual side of things. I think you've already seen a lot of them do that virtual kind of video tour with respect to the, listing side. They're going to probably increase their technical capabilities quickly here. I know like open houses traditionally have been a good, way to get people in, but that's not happening right now. And then obviously people are concerned with, a bunch of people coming through their homes. So I think you'll see that more and more, but I think realtors, at least in our area, are a little slow to react to the virtual tour. But that's where, if you get a good listing agent, you can have one do that video tour. So maybe you can limit the amount of people that you don't know that are coming through their house.
Yeah. And I guess to wrap things up, well, thank you for the time, number one.
Yeah.
Where can they, if I have a more, so when I make a referral to Jason G and his group, right, what I like to say is you represent multiple lending solutions, multiple type of bank lending outfits, so that you don't go to one bank and get one bank's rate. You can shop it and go with a solution that makes the most sense, right?
Yeah, so we are both a direct lender and a broker. So we can lend our own money and control the process extremely well, and our rates are extremely competitive. But we also have the access to, I don't know how many wholesale lenders we have access to, more than we need. So if it doesn't fit what we're doing, then we can, really, we've been doing this quite a while. We've worked on thousands of transactions. Like, we know how to get stuff done. So, but yeah, so we have a multitude of options. It's, and the technology's there. That's the other thing too, is like, we used to take paper applications all the time. Everything's electronically signed. We're sending videos explaining the process. You have a mobile app where you just sign your documents like that. It's like, I'd love to shake hands with all my clients because I'm kind of old school, but at the same time, we're 100% mobile. Like you barely, like almost nobody needs to actually sign a paper anymore.
Mhm. And that's important now.
Yeah. It's hugely important right now.
Well, Jay, thanks, man. Where can anybody viewing this video, where can they find you? Academy Mortgage. What's the phone number?
Yeah. Our office line is 413-284-2239. Our website is www.thegenegroup.com. Gene is my last name, Jean.
All right. And it's going to be what all the posts are too. So.
Yeah, cool. Right. So yeah, any questions you have at all, if anyone's watching this, just reach out and, hit my extension and we're working remotely. We're working hard remotely. Long days right now.
First video with no kids. Look at that.
What's that?
First video of this thing with no kids yet. So.
Yeah, I know. It's amazing.
All right. Tell your wife and kids I said hi. All right.
All right, cool.
All right. See you.
All right. See ya.